Morning all, how are we doing? How's the sound this morning? Just double check the mic's working. I had to adjust it back to 95% again, the mic this morning. But hopefully that's okay. Seems to be a little bit of background noise on the mic pickup again. Don't quite know what it is, but got this noise that goes up to there. I've no idea what it is. I've just turned all my fans down this morning as well because I can control all the fan speed and everything on my PC. It's definitely on the fan, so I don't know what it is. Anyway, hopefully it sounds okay. Good. Awesome. Morning ladder, Stevie, Peter, Diamond. How's everybody doing? Quickly start off with the news this morning. We had GDP this morning, better than expected. Doesn't really do a lot GDP because it's not a leading indicator, it's a reactive indicator. So GDP is an outcome of monetary policy, so it doesn't tend to really move the market a lot. We haven't had a lot of movement. We had a bit of positive movement off the pound, but nothing dramatic. And then this afternoon we've got University of Michigan, the famous 500 student survey that the market seems to pay a load of attention to for some unknown reason. This afternoon at 3. So anyway, Peter, I completely lost my sound after updating Windows last night. Yeah, it's got a life of its own. For some reason, this thing, every morning now, when I come into this thing every morning, and go into sound, this is set at 50%, this mic bit here. It never used to be, never done it before at all, and yet for some reason from Monday or Tuesday this week, every morning it just says, actually I'll be at 50% today. No idea why. Doesn't seem to be a default setting, it's just, yeah, Windows, love it. Anyway, so yeah, that's the news for this morning. We've got University of Michigan this afternoon. So we've had all the news this week. No news this week. It's been a very light week, apart from the news. So literally, it's like accumulation, bit of news, accumulation. That's it. That's the market at the minute. If there's no news, it ain't moving. Very hard to extract money out of. So yesterday I did 0.93, which was the 11th. I mean, that's a lot yesterday. Was it 11th yesterday? Blimey, it was, yeah. Okay. So US dollar CAD. Let's have a look at all of this. Busy day. So US dollar CAD basically closed out a load of drawdown control. I think I covered this. Did I not cover this yesterday morning? I think I've already covered this. Don't know why. But anyway, closed out all of that. So you can see all these positions here. I did a little bit more drawdown control on the US dollar CAD using profits from the pound US dollar, which is that one there. So that's sale. Took all that off yesterday morning. And then for the rest of the day, Swiss yen went flat on. DAX, I closed out 3 positions on the DAX. This is one I said about yesterday morning, if you remember. So yesterday morning, we opened up and gapped up, and I said we were just about to do a gap fill, and basically the plan was I had these 3 positions which were a bit too close together here, that one, and there was one there and one there. I was going to use the profit of this one to close out all 3 of those so that I've got better spacing, which I did. So I made some profit on the DAX. And again, good old oil. Oil is my absolute backbone at the moment. I don't know what I'd be doing without oil because it's the only thing moving, and it's moving in a beautiful range where I can just keep milking it and milking it and milking it. So oil yesterday closed out one up there and closed out a couple more as well. So good day on oil yesterday. We've broken up into the area of balance on oil. So this is the area of balance. We pushed down, obviously went into accumulation, and now we're pushing up and retesting this area of balance. So the plan would be to accumulate and push from there. We've broken out of highs, so we broke out of highs on Thursday for the first time, came back down, retested the lows, and then yesterday we finally broke out. So looking for a continuation movement up. I've still got one position on oil, so hopefully oil again today will be what I make my money out of. But yeah, that's it. So that's what I banked yesterday. Not a bad day, not a great day, not a bad day. 93%. Target is 0.5% a day, so well over target. Well over target for the week. 2.5% target for the week. 5.5% at the moment, or 5.3. I've got 6.5% drawdown. This is fluctuating between 4 to 7%, pretty much like clockwork. So it's just a case really of just banking stuff as it comes up. And just waiting for everything to move. It's the same old, just waiting for everything to move at the moment. So you can see what I've got on. I've got one oil. I've got 3 DAX. Shorts, one there, and one there. We've gapped up this morning on the DAX. And it seems to be wanting to run away. So hopefully it's just going to get up to there and drop for the gap fill. I've got Aussie New Zealand, which is just a waste of time at the moment. You know, I said when I got into this, I said, remind me when we look at this that I said I shouldn't get into this. I'm already feeling that. Basically, looking for that long. The reason for this trade is 4-hour trend. We're back down at the 72. So basically the 72 has held up and 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 held up. And basically as soon as I get into it, obviously what does it do? It just breaks down below the 72. So we're just trying to push up again at the minute. But I still like this long. There's no reason why the Aussie should be weaker than the New Zealand. At the moment it's just having a temporary wobble. So looking to get into another position, potentially down here. Got those two on. Actually, we'll just measure what that is at the moment. 20 pips on a 28 ADR. Why did I not take a trade on that this morning? Oh, because it was 27. 1 pip out, basically. I'm going to take a manual on that. Just enter in one more. 1 pip out. How annoying is that? 28 ADR, half an ADR is 28, which is my limit between entries, and that was 27.2. So it didn't take the trade. So just taking a manual one there. And I'll take that off somewhere up the highs. So yeah, got that one on, and I've got good old pound US dollar at the moment, which is still struggling after the news push. It's just stuck there. We are flagging at the minute, so a bit dangerous. Could flag out to the upside. I've got a stop on this position, which is slightly larger than the rest, but again, just sideways at the minute. If you look at it, that's the high of the month, basically. That's last week's high. So I've got to stop above last week's high. If they come up and tap last week's high, that's fine. If they come up and take the last month's, I'll stop out on it. But that's pound US and US dollar CAD. Again, going nowhere. I've got an aggressive position on this one down here, which I took yesterday. I had an aggressive position there, which failed. That one there. So I've taken another aggressive. I'm not actually that worried about this from a drawdown perspective. It's only in 2.5% of drawdown. When we start getting up into 3% of drawdown, that's when I start to be thinking, need to start to do something about this. but it's more the quantity of positions I've got on at the moment rather than the percentage and the distance of these initial positions. These are only small positions. These are tiny ones. The 0.23 is my normal lot size on this. These are only 0.5s, 0.6s. I've got 0.18 there. But it's a long way away now, you know, to get back to my initial position on this. We're looking 4.5, 5 ADR. It's a long way away. So I'm likely we're going to get back there anytime soon, isn't it? We're looking at weeks to get back up to that level. So that's why I'm doing a little bit of an aggressive position. What I want to do is get myself back to roughly break even, somewhere around there. And I want to start killing these off, just so that we've got an opportunity to get out easier. But I'm only just over an ADR away. It's not the end of the world, but I'm just fed up with it. It's just not going anywhere. The US dollar's got no power at the minute, so I will deal with it. Stevie, you lost your sound as well. Had to reboot. Rebooting didn't work. My other one's still configuring. Have 2 laptops. Is there an update on Windows then? Maybe there's an update on Windows which has screwed the sound up. That's why I've got the problem as well. Who knows? Morning, Sammy. You're a bit late. Right, so that's where I am. Positions at the moment. News we've covered. So yeah, just waiting in DD at the moment. I'm going to give it to the end of the day and see where everything gets to. I'm hoping by the end of the day we'll have some positive movement. We've had a few days where it's just been gradually squeezing. Everything's been gradually squeezing against me apart from oil. So I'm hoping today we get a little bit of positive movement, just so that I can take some profits off. Do a little bit of DD control on this US CAD, and then I'm going to make a decision at the end of the day based on where I am as to what to do, because I just want to get on top of some of these US dollar CAD specifically, and I've got loads of profit to use for drawdown control, so I'm happy to give a little bit of this back just to get myself a little bit more comfortable. I don't mind sitting around 5 to 10% of drawdown. I just hate it when I'm sitting in 5 to 10% of drawdown for weeks because nothing's moving. It just makes me want to get out of them, basically, just in case. Right, so that's where I am. The funded account did 0.31% yesterday. Just closed out some, funnily enough, closed out some oil. And also a DAX. That was a loss on the DAX. Stop out on the DAX. Don't forget this was 1 ADR. I had 1 ADR stop. I've increased it to 2 ADR stop because 1 ADR stops, you're going to get a lot more of that sort of thing, stop hunts going on. So I've increased it to 2 ADR and also increased the risk a little bit as well. Just to try and get some profit in quicker because it's going to take ages at this rate. Excuse me. So I've got a bit of oil that I can bank today. Target is 8%. So I'm only. This is the 3rd day in, so I'm not really gone anywhere yet. But yes, we'll see what happens to that one. But yeah, I made a profit yesterday, so that's good. Right, ADRs. So weeklies we can kind of ignore. We don't have to ignore them, but I mean, have a look at them all. But it is the last day of the week, so we will hopefully get some movement. So things like US dollar CAD. Obviously, we've hit our weekly range yesterday. US dollar Swiss, same thing, hit the weekly range to the downside, and the US dollar yen. We've got New Zealand dollar US dollar, which is hit is 150% of its normal weekly range. So on Monday we started here, and we've screened all the way up to there. It's a liquidity run after liquidity run on this thing at the moment. So I got a good feeling about this gap fill. Just, as I say, waiting for some US dollar strength to come through at the minute. So if you want to get into a position, that's obviously just come out of an extension on the hourly. 4 hourly, we're still extended. So this looks like a nice short. We looked at this one yesterday as a short opportunity. We are starting to get some profit take moves in there, but nothing's actually dumped yet. We've got pound New Zealand. Big drop on that. I'm short pound, so yeah, don't want to be longing that one really. New Zealand dollar CAD. Again, nice opportunity there. We need some CAD strength. Oil's been very weak. CAD's been very weak. That one looks like it's going to come back down and do the gap fill as well. Euro New Zealand's another good one. I'm short on the euro. Very nice extended on the 4 hourly though. We're due a pullback at some point, but as I said yesterday, when we're in a downtrend, the pullbacks are weak. So, you know, you can get into these and you'll get good entries on them, but don't expect to get, you know, huge profit take pullbacks all the way to the 24, small pullbacks and drops. So good opportunity, particularly on that one, but obviously counter trend. And Aussie US, same as the New Zealand US, only take one or the other. Aussie US and New Zealand US pretty much the same thing. Extended. So done its weekly range. But obviously all this has done, all of these, as you'll see, are US or Canadian dollar based, mostly. Apart from the New Zealand ones. So Canadian dollar and obviously all US based. So all based off the news mainly. Monthlies, we've got 3 on the monthlies. We've got the Swiss yen and the pound New Zealand and the US dollar yen, which we looked at. But Swiss yen is a new one. Was that a new one? Yeah, no, we looked at that one, didn't we? So that was the push for a short. But yeah, so nothing on ADR today, and with the news today being University of Michigan, probably not an awful lot going to be happening. US dollar Swiss, Sammy. You're long on this, aren't you? So we looked at this one, and I said about these levels, remember? Specifically that level there. We covered this one yesterday morning. I said that's the level, really, I would expect us to get a reaction from. And we tapped it yesterday, and we've had a nice little bounce. So remember I said this is where I'd be doing aggressive drawdown control. Did you do any? Did you need to? If you did, you should have done. But yeah, so you would have had a nice little profit out of an aggressive position there. But this US dollar is really struggling. So we got a little bit of a bounce, but as you can see, it's nothing dramatic. We've just gone into an accumulation. We have got the reverse alert though. This is very similar to the US dollar CAD, which I'm in. So, you know, I took an aggressive position on that US dollar CAD yesterday. US dollar Swiss is very much the same sort of thing. We've got this big propulsion move to come and play around in, but we've also got one, can't really see it on there, but we've got this one here where this move actually started from. That is the one I think we're probably likely to get up to, which is kind of that resistance. But there's lots of different resistance areas up here that we could tap into. So it looks good. We've got the reverse alert on the hourly, which has been retested. So I think we'll probably push up above the highs today. But we need some strength off the US dollar. We just need some movement, really. We need some banks to put some injection money into the market. It's just flat as a pancake. So, but you still like it. What's a good profit target for the New Zealand dollar, US dollar? As a short or a long? Short. There. So down here basically is where I'd be looking to go. So we've got this area here which is kind of resistive in this accumulation. initial target depends where your positions are, where your averages are, what your position size is, how long you're looking to hold. There's many factors, but always when you're looking for targets, you're looking for areas we're expecting price to trade to, obviously. So there's no point in getting short here with a risk there, and you're needing a 4-to-1 risk reward, so your target is there. Yeah, look at where price is likely to go to, not what you want. If you have a risk reward demand that is highly unachievable, it's not going to get hit, is it? So look for where, if price drops, where do you think it's probably going to come to before it's going to find some support. So support is always going to be around areas of liquidity. So the Asian low today, yesterday's low. Failing that, this propulsion gap is likely to get tapped. So it could go halfway, it could tap the top of it, it could completely fill it, run into some support and bounce from there. So yeah, that's a good target, that's a good target, somewhere around there is a good target. So if you want to do the TP1, TP2, TP3 thing, which I've never really done, but that's what I would be looking at for targets. Support, resistance. Morning, Neo. US dollar CAD's monthly range is at 125.522, and there's quite a big market gap just above it. Could be a target. US dollar CAD. 125.522. One, two. This area here, yeah. So this support resistance, basically. Excuse me. Yeah, I mean, if this thing is going to come down, it's going to come down. There's nothing we can do about it. It's broken the lows. I don't know what's going on with it, US dollar CAD at the moment. We've got very little US dollar strength. We've got very little CAD strength at the moment. So, yeah, it could well come down here. I don't know. I don't know where it's going. I don't pay anywhere near as much attention to 4-hour gaps. They do work, obviously, because obviously it's a propulsion move, so the market needs to trade back into these moves to get orphaned orders and come and retest areas so that we can confirm there's more sellers or buyers in those zones. But they get orphaned a lot more, the 4-hour ones. So the M15 really are the ones I like to pay more attention to, because these are more indicative of the actual move happening. When you get these zones, these propulsion gaps, they are basically an accumulation of orders which the banks are accumulating to build a bias, long or short, to be able to make profit. This is the profit move. After the profit move comes usually a continuation where everybody jumps on board with the bank, and they take the sort of second part of the move, if you like. So this is the most important bit, this initial move by the bank, because this is where the bank is going to defend its orders, if it's going to add to those orders, if it's going to be a longer term position. When you look at this on so this is Wednesday. If you look at this on a bigger time frame, like a 4-hour, it's a much bigger candle. So the actual move was kind of there, or somewhere around there. That's the most important part for me. This big bit here is everybody else jumping on board. So I find that just less accurate on higher time frames. The lower time frame ones, you just tend to find they play out better. But yeah, so talking about those zones, obviously, we've got this big one down here. But if you look at this one here, this propulsion gap here, if you to look at this accumulation break on a M15 chart, you'll probably find it's something like that. It's not the whole thing, it's the initial move. And that is what it tapped into, which is why I say sometimes they get filled by 50%, because they're actually tapping into the top of the actual 15-minute break. But you get that continuation which draws on a 4-hour chart. Obviously, everybody that's jumped in after the banks. So, but yeah, US dollar CAD at the moment, I don't know. It's a pain in my backside. I have 0.08 around top ADR. Don't know what that one was. We've moved on. Can you share your set file for the market for the My Forex Funds test? I've got a similar setup running on demo. Yeah, I can do. I'll find it. I've actually just changed it. So I've got 2 that I set up. So that is the one I've got set up. That's the previous one. I'll put them in the Telegram group. If I can, why did they not? Oh, there. There you go. I've put them in the Telegram group. Pay more attention to the 15-minute gaps. Yeah. My gap indicator isn't showing gaps properly. Why? What's it not showing properly? The only thing you've got on the gap indicator is amount of bars back. So you might have to change that if you're not seeing all the gaps. Apart from that, there's very little other settings on it. That's how I have mine set up. The higher time frame gaps do seem to play out, but you have to wait forever. Yeah, this is the thing with the 4 hours. You know, like this, you got this orphan up here. It will probably get back there, but not because it wants to get back there. It will get back there just because the market moves up and down. These are just areas that people are watching because it is an area something happened at before, and you get that crowd mentality where, you know, we all get back there and everyone's, oh, is it going to happen? And you see a bearish candle, everyone goes, yes, it's happening, and they make it happen by seeing something happen. It's this self-fulfilling prophecy. But the M15 ones are showing you the actual moves made. So, you know, the accumulation move, that gap. Yeah, look at the accuracy of the fill on that. That is whoever made that move adding to their position and stopping price getting higher. If you look in something like Boocamp or in Jigsaw when we're doing futures, and you see on the ladder, you see those orders sitting there on the ladder. You see a big order sitting there, and you see the heat map showing that big order there. And then those orders will get eaten up and they add the orders back in. Then they get eaten up and they add the orders back in. Yeah. So basically they're just hitting the offer constantly with massive contracts. That's basically what's happening there. Yeah. So they've entered in a short position. Market's pushed down on their short, and they will not let it get above that level because they want it to go short, and they have got thousands and thousands and thousands of contracts they can use to make damn sure it doesn't go any higher. And then eventually the market just goes, nope, we can't get any higher. And everybody that's bought there trying to get higher basically, as soon as it gets down to here, they puke their orders, and boom, the banks win, and it flushes again. And that's basically what these gaps are showing you. The propulsion moves after the accumulation's done by the banks. You don't know, and this is why they work sometimes and they don't work sometimes, like everything. You don't know when this move started whether or not there were other institutions or banks that have orphaned orders in these sections which they need to come back and complete. So the market is naturally attracted back to them because there's unfinished business, and there's this term in futures trading called unfinished business. You have unfinished business in that area, so they take the market back there to confirm whether or not they should be buying or selling in those zones, and then they step in again and pump it back down, and it's just a repeating cycle. But you'll get back to them at some point, and the thing we don't know is this a long-term move by the banks, or is this a speculation move, i.e. a short-term trade? If this is a short-term trade, likelihood is the bank's out there, so when we get back to there, they're not going to add to their position, and it's going to flush through it, and off we go in the other way. If it is a long-term move, when they get back there, we're going to do exactly what we just saw there. They're going to add into their positions, and they're not going to let price go back above there because they are going short. We don't know. All we can see is contracts. We can't tell whether they're speculative, whether they're in, they're out, what's going on. So we just know that something's likely to happen there. Yeah, it's an area of interest. Are the 15-minute gaps more relevant than the 5-minute gaps? Well, the 5-minute gaps are basically less of the move. So this one here on Wednesday, on 5-minute, yeah, that is the initial dump. Yeah, but it carried on all the way down to there on the 15-minute. So it's just a bigger gap on the 15-minute. You know, these orders. This order happening here is, let's say it's, I don't know, let's say it's 5,000 contracts. They will enter those in 100 contract lumps. Yeah, 50 times. They'll add 100, add 100, add 100, add 100, add 100, add 100. They'll keep adding and adding and adding until eventually the market goes puke and it goes pop. So it's just basically, how long does it take for those 5,000 contracts to get entered? Sometimes there'll be light liquidity in the market and those 5,000 contracts will get submitted in an hour, in a minute. Other times it might take 5, 10, 15 minutes. They might do it over a period of an hour where we see a long accumulation and then a pop. And you know, that might take a long time to move down. But the smaller the time frame, the more accurate you get. But I don't think it makes a lot of difference, M5 or M15. It's an area where we started breaking out from. If you're going to use them, you know, whether you start there, so let's draw that level in as an example. Yeah, so it started there on M5. On M15, it's a little bit lower there. Yeah, because it's a slightly different time frame. But at the end of the day, what's the difference between M5 and M15? Nothing. The M5 gap is shorter. Yeah, so the M15 gap finishes there. The M5 gap has vanished. Okay. What? Wednesday. Which one am I looking at? It's this one, isn't it? We've moved on a candle, haven't we? That's why. Okay. So there's the M5 gap, finishes there. And this is why I say sometimes you will find price will come back and it will partially fill a gap. The reason it's partially filling the gap is because it's getting to that point where the banks step in. We don't know, the banks aren't watching timeframes, they don't use candlestick charts, they use price levels. So the price they started moving it from was there. Where they're willing to defend it from and where they can defend it from will be dependent on how many other banks are pushing back in the opposite direction. Don't forget there's 10 banks that run this market. If 3 of them started this move, there's 7 of them battling back. Who's got the biggest wallet at that particular time? Which is why it's a zone. We don't know where it's going to turn from in this zone, but what we do know is it should be defended somewhere in this zone or this zone, M15. So there's your M15 and there's your M5. Somewhere in there, if this is a long-term move, the banks are going to step in and pump it down. So if you get to here and you just hit the short button with a stop above there, there's your trade. Whether you get in there, there, or there is going to be dependent on your risk reward. Yeah. If you wait until it gets right to the top of the gap, yes, you're going to get the tightest entry possible, but it might only fill 50% of it and you'll never get that entry. That one is a safer entry, in my opinion. Getting halfway through the gaps on M15 tends to be something that happens quite often. But look at this one here. Yeah, tapped into it. Yeah, you could take this to another level. Go down onto M1 and see how big was that propulsion gap yesterday on M1. Where's my propulsion? I haven't got that many candles back, but you know, you can take it to the nth degree, can't you? But I just find M5, M15, one of those is good. But again, it's like everything, support and resistance. It's an area, it's a zone, it's where we're expecting something to happen. Sometimes it taps to the pip, sometimes it doesn't, we don't know. But the fact of the matter is you've just got to use one or the other and stick to it, which is why I like M15, because the M15 gaps tend to be bigger and easier to identify. And from a targeting perspective, that's why I always try and target roughly halfway through the gaps. And that's what tends to get done. It either gets to that halfway or it blows through it, usually. We don't know if it's going to hold or not. Anyway, there's a little lesson on gaps. What's a good platform that you can trade gold? What? What's a good platform you can trade gold? You can anything you like. MT4, MT5, TradingView. Pick some futures software if you want to trade gold on the futures market. NinjaTrader. I don't know. Not sure I understand the question. I was relying on H4 and daily candles. They really barely get filled. Yeah, I mean it's the same as everything. The bigger the time frame, the longer the trade is going to take. Yeah, if you're trading H4 and daily, you're talking weeks and months and quarters to get to your targets. If you're trading M5, you're talking hours. But obviously, there's the reliability factor is very different. You know, look at it on the daily. We've got a daily propulsion gap there, which the next day it tapped into. Then it tapped into it again. Yeah, but you know, it's just on the daily chart. You know, you want to be playing intraday. On the daily chart, what you're doing is you're trading back down into this area, aren't you? But let's say it pushed up there and you took a short there to play the gap fill. Yeah, you entered that trade in June. You're still in it because since June, all it's done is accumulated. You're still in that trade from June. Can you imagine taking a trade in June and having to watch it every day, sit in that range? Just not interested. Though totally different strategies, daily charts. Right, let's get on some analysis. Now I've been waffling on about that stuff. Let me just take these lines off so I don't confuse myself. Right, so ADRs we've got nothing. Hourlies we've got a few to look at. So Euro New Zealand, we are extended on the hourly. Euro obviously is a short, and has been for a while. The New Zealand dollar has been very up and down. So where we are really, really nicely extended down here, we haven't been down here for a while. So this is the Ukraine crisis kicking off. So you kind of ignore that RSI because it's fundamental driven. Last times we were down at these levels, we got very, very, very nice reactions, very nice bounces starting. Down here we got a decent reaction, although it was very, very, very choppy, and we're back down here again. So the likelihood of getting a bounce is high, but it is counter trend. So it's again one of those things you need to look at. I'm sorry, I'm on the wrong chart, and I'm on the 4 hour, but we're extended on the 4 hour. Let's do the 4 hour analysis first. There's a high probability of a bounce, but we've got a really good kind of support here and a propulsion gap to aim for. So that is definitely possible and likely, but obviously it's the euro and it's been coming down for absolutely ages. So on the hourly chart we were extended here and we are embedded because we basically didn't get that bounce. But again, look at the gaps. So this one here I wouldn't really class as an accumulation. That's not an accumulation really. That's a kind of V-shape. That's an accumulation. That's an accumulation. That's an accumulation. So this one and this one definitely. So an ADR hit, not necessarily going to hit ADR today, but over the next few days we should definitely be getting back up to there. If we're going to get back up to there, it's not actually far to get back up and retest this area, is it? So nicely extended, but obviously it's counter trend, so it depends whether or not you're brave enough to long the euro. We'll see. But that's extended. It's only just extended. You know, when things get extended to the 70-30 level, it's a case of, right, let's start paying attention to this and look for areas we might be bouncing from and see what happens. I don't like trading off a 70-30. I prefer to trade, as you know, when we're much more embedded and deeper. But at the moment, because the markets are so shallow and light, this is kind of where we're getting to. Occasionally we might get to an 80-20 extension, and that's about it. So you've got to kind of pay attention to these. M5 reversal alert you're just about to get this morning as the market is pushing up. So if you're going to take this one, there is plenty of upside momentum. You got all the way up to there. So if you took this one, you've got sort of a good 100 pips move to the upside, should be at least. To be safe, obviously you'd be looking at yesterday's low as an initial target. So that's not looking too bad, but it is counter trend. It's very nicely extended on the 4 hourly and obviously on the hourly. Pound odd. This one we're really embedded on the on this at the moment. We've got strong Australasian currencies at the moment, and obviously because the pound is weak, it's been absolutely hammered. But we will get that pullback at some point, that profit take move, but not likely to be big. So where we're extended and embedded down here, we got the RSI extension just about there after that push down into the gap. There goes another example of it. Yeah, on the hourly. So you might find the M15 gap actually ends there. They tapped to the top of the M15 gap there. Yeah, so we pushed down. That's where we got extended. Since we got extended, we've basically accumulated another day of drop, which has taken us deeper, accumulated another day of drop. It's absolutely exhausted. We haven't even had that profit take move yet. Yeah. So even if the profit take is only around about half an ADR or so, that's in a really good spot, pound odd. But it's very, very weak. We've had positive news on the pound this morning. Yeah, it's just not doing anything. So Again, risky one because you are counter trend on it and it's only just got extended, but this one's been embedded and extended around about these sorts of levels for a while now. So potentially good looking opportunity. On the 4 hour, I'd imagine we're extended. Yeah, we're way extended on the 4 hour. We'll look at these on the 4 hours again in a minute. So pound New Zealand, again, same as the pound odd. It's pretty much the same pair, trade one or the other. That's a little bit more extended. Absolutely cascading down. These New Zealand and Aussies are the only thing really that's got any strength at the minute. It's not so much that, it's just the fact that everything else is so weak. It's like with the yen, we're not seeing massive strength in these currencies, we're just seeing everything else ridiculously weak, and obviously any kind of strength whatsoever in the Australasian pairs is just pummeling it. So good moves down there, good reversal opportunities down there. You've just had the alert and you're retesting now, 3-bar reversal, that looks spot on for a long right now. New Zealand dollar Swiss extended to the upside. So New Zealand dollar Swiss, we've just got this break this morning above this high, so we've been stuck in this kind of range for a while, where we've just been sort of bouncing around in this range, and this is the first time we've actually got price discovery outside of that range since sort of early July. So good month. I don't think it's going to have enough strength to get a flyer out the top there. So this is probably a good spot to start looking for shorts. Nicely extended. We should be looking for a pullback sort of into this area, mid-range, and if it is going to push, that's probably where it's going to go from. So that looks really good. M5, you're just about to get an alert. It's trying to get an alert now, not managed it. So we're just sitting up at the highs at the minute. So that'd be my initial target down there if you're playing a short-term trade. So New Zealand dollar Swiss looks good for a short. I've already got a New Zealand on, got no Swissy on at the minute. Just toying with the idea whether to take that or not. If I wasn't so overloaded at the moment with this US dollar CAD, I would probably take that short. I think that's got legs to come back down into here. So this is the high of that range up here. And this is the low of that range. That for me is spot on, 50% retracement into the range. If it is going to push higher, that's where I'd expect it to come back down to. Accumulation break, not been retested. So yeah, I like the look of that as a short. As I say, I've got some New Zealand on short already. This CAD is this US dollar CAD is just a little bit too deep for me at the moment. I just don't want to take any more exposure on just in case that does push. Obviously, it's a breakout. So 90% of breakouts fail. We know that. The breakouts that don't fail tend to trend. If it starts to trend, it's going to squeeze, and I don't want to get stuck with this level of exposure on and an additional pair. So I'm just not going to take that one myself, but I do like that as a short. And New Zealand dollar yen, not mucking about with the yen at the minute personally. This here, if we get an ADR on this, I will get in short. I've got bias short on the New Zealand already, and I've got no yen on. This is extended already. If we get up to that high, we're going to need to either be embedded, or depending how quickly it happens, we're going to get very extended, and we're going to hit an area of resistance where there is going to be a load of limit orders sitting up there, ready to double top it. So that we're going to get a decent reaction up at those highs. Whether it's a strong reaction or not will remain to be seen when we get there, but that's where I'm interested in it. Very nicely extended. ADR for the day, we're going to be running out of buyers if we get up to ADR today at a level of resistance where the limit orders are going to kick in. So that looks really good, New Zealand dollar yen, if it gets there. If it doesn't get there, your choice, you could take it from there. So if you got in now, you're going to need to look at roughly half an ADR to 3/4 of an ADR assuming that they do a liquidity run off of that high. We're probably looking for half an ADR at the top, so 50 at the top. So you're looking at probably 100 pips potentially against you, one ADR, if you were to get in there now. We've just got a reverse alert on it. So what I would do if you want to get into this one, this New Zealand dollar yen, pending order under the low, either that low there or lower that candle, and trigger basically on the retest. So when you get the retest alert, so if this candle now closes down here somewhere, you're going to get your retest arrow on the reversal alert. That would be where I'd be looking to enter. To be safe though, I would probably go under that low or that low to get in. And then you've got plenty of room to the downside. If this reversal alert doesn't hold and we break up above there, likelihood is they're going to reach for that level, which is not far away at all. But that would be much better as an entry. I'm just going to stick an alert just to tell me when we get up to ADR. I'll get an alert off the ADR dash, but just for belts and braces. Actually, we just check, make sure I've got the right noise on that. No, I haven't. So yeah, like that a lot. New Zealand dollar yen, if we can get up there. So there's your hourlies. Aussie dollar CAD looks exhausted on the daily H4. So these are the H4 RSIs. Yeah, Aussie dollar CAD is tired. Again, ADR on this today would be absolutely lovely if we can get to ADR. I'd love to see the Canadian dollar kind of weaken at the moment and give the Aussie dollar CAD opportunity to get up there, and that would give the US dollar CAD reason to move up as well, which will kind of get me out of a load of my CAD. And then if I could get out of that Aussie US dollar CAD completely, I'd like to short that out there as well. Aussie dollar yen is 4 hour extended. Again, we're up to a decent extension, just got over the 70 level at the moment. We are going to be looking at sort of 75 if this move continues. Again, likelihood is up here we're going to start to get a pullback and profit take move happening. So the same as all these yens, Aussie yen, Swiss yen, etc., etc. The yen is weak, we know that, but after a certain period the yen will have enough and there will be a profit take move starting. So we are nicely extended on the 4 hour. If we can get up to sort of 75, 80 extension, again, that's another one I would look at. If we're going to do that, we're going to need a little bit more movement. If we're going to do that, we're going to get up to ADR, which is also up there. So both of those, New Zealand dollar yen, Aussie yen, both primed really for short opportunities today if we can get a little bit more of a push. You could get into them right now, but obviously if you get into them now and it pushes, you just need to add a second position in, but it could equally just go from here. You know, things get exhausted, they get tired when they get to this level. You know, after a big push we get tired, and you just don't know when that move is going to start. We know it's going to start up there because there'll be limit orders sitting there ready to trigger. So, and it's an area of liquidity which everybody that's entered short, any long-term speculator that has entered short will be exiting their hedge or whatever position they're in for whatever reason. They'll be exiting it there at that liquidity. Looks good. New Zealand dollar yen, the monthly AMR is right at the tip. Yeah. So it's 446. Where are we? Beginning of August. Yeah, 449. So 446 is the monthly range. 449 is the tip of that high. So yeah, if we get up there today, oh god, I've realised I've left that stop hold on there. Don't want to leave us 0.65 short on that. That could be painful if that had triggered and gone against me. Yeah, so like that up there, looks really good, that one. Other than that, we've got a daily on the Euro Swiss, which we've had for ages. We've been embedded on this thing for ages, since kind of here. It's the Euro, don't want to long it. Euro New Zealand, 4 hour. So yeah, this is very, very nicely extended. I like this a lot. Not for a point where I think we're going to push, just for a profit take move. And as I said before, when I was doing the analysis on the hourly chart, push back up into that area, the propulsion gap, those highs somewhere around there today, or over the coming days, is good. So very nicely extended, but it's a counter trend trade. With me in my portfolio at the moment, I'm not going to be taking anything high risk, so I'm not going to take it myself. But I think the New Zealand dollar is tired, and it will start to weaken off, and then Euro will have an opportunity to take advantage, but unlikely. Henk, do you use the COT report to help from your bias? Not at the moment, no. The COT report is very useful in more normal trading conditions. At the moment, it's all over the place basically. Market's in a bit of a mess. So, oh my god, what's going on with my website? Every now and again, you get an update that screws this up. I'll sort this out. Oh, there we go. COT report. I do use it. I glanced at it this week to have a look. It's something I've got a sort of love and hate relationship with. I used to use it all the time, and then I fell out of love with it because it started to not make sense. And then over COVID, I was looking for another confirmation of directional bias, and I started using the COT again. Since the Ukraine crisis kicked off and the market sort of started to crash, I've kind of fallen out of love a little bit more with it as well. So the biases on this are the futures positions, open interest, but the problem with it is these are very long-term positions, and you don't know whether these are long-term speculation or long-term hedge. If they're hedges, it doesn't mean that the market is necessarily expecting the US dollar to go up. It means that they have hedge positions on a US dollar long based on something else, like a yen short or something. And there's lots of reasons hedges are taken. Hedges are mainly taken by hedge funds on behalf of big businesses who need to protect profits on long-term transactions. So these are quarterly, really, forecasts, if you like, which give you an overall directional bias of long-term movement. But it's a lot less useful when we are in a risk-off scenario, because there's a lot less speculative information in here. So people are trading, institutions and banks are trading shorter terms in riskier environments because they don't want their risk held long term, and there's less. There's more uncertainty in the market, so therefore they don't want long term speculation. So the COT report is very long term. And I stopped using it when the Ukraine crisis kicked off. Still updated, and I still look at it every now and again out of interest. But the pound has been long since January. A lot has changed on the pound since then. I'm certainly not long it. But the open interest long-term futures is long on the pound. So yeah, I'm just not using it at the moment. Right, Euro New Zealand we looked at. Pound odd. Again, massively extended. You know, COT report is long since January. Yeah, look what happened. You're kind of doing the opposite, aren't you? But you know, these are other factors at play in here. Yeah, Ukraine is in here. There's a lot of other stuff that's happened, and the futures market I see as the COT report and the futures market I see as in a normal market condition where we have a normal stock market moving and normal speculative trade happening. Everything, think of it like, you know, all the cogs of just turning away, churning. The market's doing what it normally does. You know, the S&P historically has been our vehicle for investment for many years. It goes up and then it has the occasional dip, goes up, has the occasional dip. This is what the COT report is helpful for. This sort of market and this uncertainty we're in at the moment is just not useful. So dip in and out. Pound odd. Massively extended. We're down below we're just about to trigger an alarm below the 20 level. So we are very extended. Not quite going to get to 15, I mean, no, 17. So we're not far away from triggering on 15. Very extended based on weak pound and this Australasian strength that we've got. So like this as a long, but trying to find somewhere lower on this is tricky. These lows down here are really next proper stop. There's an area here, yeah, where we've had some reaction previously. So there's this area here, but if that doesn't hold up, which is kind of in the middle of a range, less likely. We got a big old drop down to 161. Which is a big drop. So if this does decide to fall out of bed, a la that or that, you're going to find it hard to get out of this. And there's no real reason I can see at the moment why we should be bullish on the pound. So although it's massively extended, I think we are going to get a profit take off of it. It could well be one of these kind of choppy pullback profit take moves where we're just really going into a wide accumulation before the next move down. But saying that, it's rare that we get that extended without some kind of reaction. So this looks like a really good long as well. They're all setting up, all of these, you know, the euros, the pounds, the ones I don't normally want to long, they all look really tasty at the moment for long opportunities. But it's just against my bias. The pound Swiss, same situation. Look at that nasty wick. We're just coming out of extension on that one. We've had this big strong push up. Pound's coming down fairly hard off the back of that news at the moment, just so you know. It's coming down, you know, we've just had positive news on the pound. Yeah, GDP is better than expected. What's happening to the pound? Tanking. You know, so they may be doing a liquidity run before they pump, but you know, it's not, the pound's not got any strength, so they are dangerous to take down here. Pound New Zealand is even better, absolutely shot. You know, we're down below the 15s. We don't get down to those levels very often, and when we do, it's the final straw usually. Yeah. So, but that's what I mean. Yeah, when you're trading counter trend and you get these massive extensions, don't expect that. Expect that. Yeah. Short term pullback. Look at that. Support, resistance. Maybe even look at that as a level. It's a level we've touched on a few times. Maybe look at that. Pulling back into the support rectangle. Yeah, so if you're going to take a long on it, get out somewhere there to be safe. Don't hold, just don't try and hold it, because you could do that. In which case you're going to get that, but you're not going to get that. Yeah, but they are very, 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 very extended. M15 reverse alert. M5, you've had one you're retesting, it's just coming down to challenge the lows again at the moment. So that looks good, pound New Zealand, but again, very, very counter trend. From a mean reversion perspective, highly, highly, highly likely you're going to get a profit take. How big it will be, very difficult. So watch the propulsion gaps, because if they're going to continue the move, yeah, that's likely where we're going to get to before they add, or maybe back up to there, but not much more. Potentially it could go all the way back up, we don't know, do we? But always go for worst case scenario. Yeah, if you get worst case scenario, you get worst case scenario the majority of the time. If you go for the best case scenario all the time, which is coming back up to the 2472 area, you're going to get let down way more. So take the profit. You can always get back in if you want to, but get out, get it in the bank. Build this. Pound New Zealand, massive extension. New Zealand dollar CAD also nicely extended. We've looked at all the New Zealands. They've had this nice big push. I really like the New Zealand yen, the Aussie yen. New Zealand CAD is very good as well. The CAD weakened off of the back of the US news. We've just pushed up into this area here. So this is a nice area. We've tested multiple times and we've pushed up into this area and rejected multiple times. So this zone here is where we are. That's not really a propulsion gap, that's a 3-bar reversal there. But yeah, like it out of here somewhere. You've got good levels. If you short this, there's your next stop. If that doesn't work, you've got that high up there. If it gets all the way up to there, this move started here. If it gets all the way up to there without having a rest, you are coming down hard at some point. So where you are right now, you're looking maximum, I would say, of 1.5 ADR before you get a move in. So you could get on this right now. You just had a reversal at an M5 and a retest. M15, you probably just had one as well. Yeah. How old are you just about to get? So yeah, like it. New Zealand dollar CAD is a short. But I've got CAD on. I've got New Zealand on, so I'm not taking it myself, but I like that as a setup for a short if you want to get into some New Zealand or some CAD. And we got New Zealand dollar Swiss and New Zealand dollar yen. So New Zealand dollar Swiss has just pushed out above the highs, back up into the 2472 zone. Swiss franc is going to power up at some point. The market is bullish on the Swissy. It's a waiting game, as it is with everything at the minute. But I like that as a short. Anytime it gets extended, this one looks good for a short. It's very, very, very cumulative. First time we've broken out. Likely this is going to be price discovery and a false breakout back down into there. We've got levels of support resistance, but we've got this whacking great 4-hour propulsion gap, which is the Swiss franc rate announcement. Yeah, so that's where that rate announcement came out, where the Swissy said we're going to do 0 rates again, and they came out and went 0.75, and the market went woohoo. And then since then it didn't look back. And you know, this is just going to get trodden down by the Swissy when the Swissy powers up. So unlikely it's going to get all the way back up here. So I'd be looking for shorts on that. Again, New Zealand dollar. And New Zealand dollar yen, which I really, really like if we can get up to there. We've already covered that one. So there's a lot of opportunities out there, and New Zealand dollar, US dollar. Again, US dollar strength, which isn't there. Yeah, so we've got these highs up here, we've got this level here. So anywhere in this zone, if it gets there, it means we're staying embedded all the way up there. So yeah, would like that as well, but I've got loads of US on. So Sammy, pound Swiss looks like M5 gap fill. Yep. But yes, but if you again think about the old support and resistance knock on the door thing, yeah. Support and resistance or trend lines, whatever you want to use, yeah. If you knock on the door 3 times, yeah, and you don't get through, you usually reject. The 4th time you have a run up, you tend to smash through it, and this is true of trend lines as well. When you look at trend lines, yeah, we knock on the door a few times and then you eventually break through. The reason being is because by the time people spot a 3rd tap on a support or resistance, it's the last one, and usually they're the best trades, because it either holds and you get that move away, or it pulls back and does its final run up to smash through. We've tested this a lot, yeah. So this area here, think about what's happening in this zone. And this isn't really a propulsion gap. It's not really an accumulation, is it? On M5, it's 20 minutes of sideways action. So it's not the best propulsion gap in the world, but it is still there. What's happening here? We tried to enter a load of buy orders and we pushed all the way up to an area where we got stuck. We came back down, we tried to buy it again. We didn't get very far, we tried to buy it again. We didn't get very far, we tried to buy it again. We couldn't get anywhere, we tried to buy it again, and we actually made a new low. Then we tried to buy it again and we made another new low. What's happening here is we are basically in sinking sand, getting lower and lower and lower. This is last chance saloon. If that breaks out the low there, we're off. Yeah, this isn't holding very well. A good propulsion gap, you will find that move happens, it tests it and it goes new low, and we never come back, we never look back, we're gone. Yeah, so let's find an example. This is not the best example, but it's a fairly good, that's a good example up here. Yeah, let's zoom in. This is a good propulsion gap. In fact, this is not a very good propulsion candle, but it explains the principle. Yeah, that's what you want. Yeah, we're gone. Yeah, we're entering short. Come up. No, we're entering short. Bang, confirmed. Done. Dusted. Buyers have got to that level. Sellers have gone, not having it, and they've gone. They've flown. That's it. We're out. If this gets tested and tested and tested, it means that these sellers are not doing a very good job of holding price down, are they? Because the buyers keep coming back to it. Yes, they keep knocking it back, but the buyers are strong. We've got a lot of strength coming in. If we're retesting an area multiple times, it means that people want to get through. If you test an area once and the market goes vroom and collapses away from it with speed, those buyers have all gone, nah, we're not getting up, we're out. Look at what we're currently seeing on this one. In fact, we've already broken it. Yeah, right, we're going long. We want to go long. We want to go long, and the sellers are coming in and going, nah, we want to go short. There's way more selling pressure on that zone than there are buyers that can defend it. Last push, big wicks, got up to that high again. Look at where we were rejected. So we came out, pushed up with a propulsion gap to there. Yeah, that is where the sellers went, no. Sellers stepped in. We're going to break that low and we're going to pop out the bottom. So you got, indicators on charts are great, and I like indicators, but you have to understand what's going on under the hood. When you push up hard into somewhere and you get massive wicks that reject, you come up, you get massive wicks that reject, you come up, you get massive wicks that reject. That is basically banks with tens of thousands of contracts entering short positions at this area because they are taking the market short. The buyers can try as hard as they want, but there's a bank with $20 billion going, nah, we're short, we're going short, and we're staying short, and that's what's going to happen. So when you see that happening, and this is, you hear the term "wicks don't lie." There's even a guy that's made a YouTube channel out of it. Yeah, you see that in a propulsion gap that was formed by a downward move. This is the guys that started this downward move defending this area and saying, no, we're taking the market short. I don't care how much buying you've got. We've got more selling than you've got. And that's basically what you see in heat map software, in futures. Yeah. Accumulation, drop. Try and get through it, not interested. Try and get through it, not interested. We're off. Yeah. I don't know who made that. Lloyd's, Barclays, don't care. Doesn't matter to us, does it? But you see how fast it happens, yeah? We push up into it and literally within a couple of hours we're out. Here, we're spending a lot of time, and this isn't really a propulsion gap, is it? Look, this is a 3-bar reversal. Yeah. Like I keep saying, and this is an important thing, and this is the problem with the gap indicator that as I see it. This is a 3-bar reversal. This is a push down, rejection, push up. 3-bar reversal, classic reversal pattern. Same as that one there. Look. Push up, rejection, push down. 3-bar reversal. These should happen after an accumulation. Pop. Build up, orders, take price where I want it to do to make money. This is just a V-shaped recovery. So this propulsion gap isn't real. But trying to program software and a gap indicator to identify when there's been an accumulation before is very, very interpretable. Yeah, how many candlesticks have to be before that move for you to class it as an accumulation? How big do these candlesticks have to be? Are we okay to have wicks out the tops and bottoms of this accumulation? If so, how far? You've got to give an indicator a set of rules and conditions and calculations to be able to draw something on a chart. Accumulation is a very, this is an accumulation here. Yeah, that is not an accumulation. That happened in 3 candles. So how big's that accumulation got to be before it goes, okay, we'll take that one as a propulsion gap? There's too many variables to program an indicator to say, only show me those ones. So you've got to eyeball these and go, right, the rule is propulsion gaps formed. Excellent. Was there an accumulation before it? No, forget it. Just got to make your own mind up. And this is why, I keep banging on about it. EAs can't replace you as a human, as a trader. This analysis has got to be done by you. An EA can take a trade for you when you ask it to take a trade, but you've got to decide on why you're getting in. Rejection, big drop, new low. Yeah, like that as a short. Yeah, because there was an accumulation before that drop. Anyway, gone on an awful lot about the gap indicator this morning, haven't we? Which is good. So that's it for analysis. All done. Everything is kind of extended, but it's all kind of the wrong way. But they are very, very extended. So there's some good opportunities out there. Still not going anywhere. Main thing that's working at the moment is pound US dollar. We got a weak pound this morning off the back of the news, which is good. Just taking out the Asian lows, so we'll see if that is a liquidity run. We'll probably get a little bit of a pullback, but hopefully we'll just come in and put a new leg in down there, and that'll be a nice little run. So TP on this for me, these 2 positions are TPing here. Obviously my average is down there, but I'm going to take some profit off there because I want to see what the market's reaction is to this. If this is a price discovery move and we've discovered we don't want to be there, we should accumulate and drop. But if we bounce hard from there, I'm going to need to obviously do some aggressive drawdown control because this US dollar is just not interested at the moment. New Zealand dollar Swiss is moving a bit. How is it? Yeah. Yeah, so I mean this, I like this level here. I think this is a false breakout, and I think we're going to pull back into midline. So yeah, looking good. Just about to get a reversal out on M15 for a short back down into here. So that would put me for Swiss franc long, wouldn't it? Tell you what I'm going to do. Should I or not? No, I'm not going to interfere with this. I was going to say I was going to take it on my evaluation account. Just taking a little bit of loss this morning on Aussie Swiss, first one. Oh, thanks. Look at that. Could I have timed my stop loss better? Look at that liquidity one. And this is why I've changed the ADR to 2 ADR. 1 ADR gets hit a lot. We know 1 ADR gets hit a lot. 2 ADR gets hit a lot less. So I've reduced my risk parameter, or adjusted my risk parameters, so that every position is going to have a 2 ADR stop on it rather than a 1 ADR stop. Because 1 ADR is well within liquidity runs most of the time. So hence that. And now it's obviously coming down. So Aussie Swiss, New Zealand Swiss, same thing. Yeah, this is Swiss franc strength, Australasian weakness. Looks good for shorts. So I'm basically on New Zealand dollar Swiss already, aren't I? I'm just on the Aussie dollar Swiss version of it. So I've got New Zealand dollar Swiss short already, but I'm just trading the other instrument. Right, that's it for today. So nice opportunity there. M5, you will have already had that. So that's good. So just managing what I've got on today. Oil, I'm not expecting to get any profit out of today. I don't think we're going to get far enough movement off of oil today for me to make any money. I've milked the hell out of that this week, which has been lovely. But yeah, we might. I mean, we've got ADR. If we get an ADR move, I mean, I'm gonna. What's that? 350. There's 220 there, so there's roughly 0.5%, just under. So if we get a push up into these highs today, I'll take that oil off, and then I'll be flat oil for the weekend, just in case somebody bombs some Russian pipeline or something stupid. But yeah, I'll get flat on that here. So yeah, I might get some oil profit today. Pound US dollar at the moment is looking like my best opportunity for profit. DAX, what's going on with the DAX? I haven't looked at the indices this morning, have I? Pushing up, back into highs again. Ooh. Damn. Missed that. I'm going to take a short on the DAX on a break of this candle. So this is an M1 reversal alert retest, kind of. But yeah, looking for a pullback continuation to get in on that. That's a double top, lovely double top on the DAX. So again, I'm playing this from the high like I did there to get out with some profit. But the DAX is just accumulating at the minute still. We're not going anywhere. We looked at this, you know, this high here basically is what we've just tapped into again. Yeah, so limit orders triggered. Everybody's limit orders have just triggered up here. Everybody's got limit orders up there. Everybody's going to have limit orders down here and that as well. So we'll see if that holds, and if we get a continuation move to the downside on that. Whoops, wrong button. But I like the look of that. DAX short. NASDAQ. Again, we pushed up yesterday. Beautiful rejection yesterday of the 200. So we had this initial rejection of the 200. We tried again, pushed up into it yesterday. We went up and dropped. we're there. This is just, it's teetering on the edge. All the indices are just teetering on the edge of dropping. We did get that breakout though on the S&P and the Dow. So we have made new highs, but we're now here, look. So yesterday was a rejection of that level. So see if we can get a bearish close today, which will obviously bring DAX down as well. We'll see. But I'll enter another position on a short there and look to get out. I'll probably go for the gap fill today actually on that. Just put TP on that one. So they'll be just under half an ADR. Go for the gap fill with that position, and by the time if that happens, then I'm in profit on that position. I was flat this morning, so took the M5 reversal on NF. Off to a good start. Cool. Yeah. Stay flat. Well, depends whether you're having a good week. I mean, you got, if you're flat, brilliant, but obviously flat is just a position like a long and a short, so depends how your week, month, day, etc. is all going. But if I'm flat and I've banked 5% on a Friday, I just take the day off rather than hold over the weekend. But you see opportunities like that New Zealand dollar Swiss, and you just think that's too good to miss, and those happen to be the ones usually you get into and go, that's too good to miss, and then 3 weeks later you're sitting in it going, why did I take that trade? Like the ADR reversals. Sammy, I don't know if you have time, but what strat did you use for evaluation on my Forex funds? So my Forex funds, I've posted the EAs in the Telegram group, but all it is very, very simple. I was using 0.25 risk. I'm now using 0.75, using ADR for stops. So I'm using stop losses, but the stops are 2 ADR away, and I've got a TP of 2 ADR. So literally all I'm doing is saying on the M5 chart, I'm trading M5, take every reversal alert in a particular direction. So with oil, I'm looking for longs, not shorts. So I've got a bias on all of these pairs. So I want to go long on oil, and all I want you to do is use the 5-minute RSI. Sorry. Hang on. Was I using? Oh yeah, sorry, wrong one. I was going to say higher time frame. Right, RSI 21. So in this case, because I'm looking for longs, below 30. So basically, RSI below 30. Take every reversal alert long. Spread the positions a quarter of an ADR apart, and get out when you make $300. So target on this for me is 4K, 8%. So I'm basically looking to take $300 at a time. So I want 10 positions to work, and I'm pretty much hit target. Yes, pure EA trading. I mean, I say it's pure EA trading. Nothing is pure EA trading, as you know. With me, I don't believe you can do pure EA trading. It's pure EA trading in the fact that the EA is getting me into the positions automatically, so I don't have to do anything. But I am still looking at my P&L on this. Right, I'm 0.25 down today. If this gets to 1.3% today, I shall close the lot and bank it. So yeah, the EA is trading for me, but it's unattended in the fact that I want to get in long on oil on M5 when RSI is below the 30 level. I want you to get me into positions when that condition is met. and I want you to get me out if you get to $300 because there's a spike on oil and I'm not paying attention. It's going to do that for me as well. But if at the end of today I'm sitting in $150 of profit on this oil trade, I'm taking it off and I'm putting it in the bank so I don't hold it over the weekend. So in that case, no, it's not EA trading. It's me making an educated decision that I want to bank that. Because today I've got a 0.25% loss, which I need to negate. Yeah. So yes, the EA is taking the trades for me on a strategy which we know is just mean reversion in line with trend, but I'm still doing stuff. You can't, I mean, I've said it many times, you can set the EA up, and this is what everybody, you know, it's the question I get asked all the time. What's the best set file? For what? When? Yeah, the best set file 2 years ago for the S&P was short. 6 months later, the best set file for the S&P was long. Best set file for the S&P at the moment is short. I couldn't tell you how long, which time frame, what ADR to target or anything, because you haven't told me whether you're trading M1, M5, hourly, daily, or whatever. Everybody asks what's the best set file. There's no such thing as a best set file. You as a trader decide on where you enter your positions, and then you can have something semi-automated to help you manage that position. Because I don't want to sit in front of the charts all day long. All these positions here, the EA has taken for me. Am I going to let it 100% manage them? No, because it doesn't know if I want to bank 200 and something. My target is 4K, yeah? If this gets to $400 today, right, that's 1%. That's 10% of my target. The EA doesn't know I've got 10% target on my entire portfolio. So if this thing gets to $400, I'm banking 10%. Excellent. I'm 10% of the way to my target. I can't tell the EA to do all of this stuff. You could create another EA that does this, but at the end of the day, I've got time to have a look at my charts 2 or 3 times a day for 5 minutes. Don't need the EA to do everything. Best set file for life, exactly. The set files and the EA are there to enter on conditions I know are favourable for me in the market. That's literally what it's doing. What happens after that, EA has entered that position, is down to me. If something is getting to a point where I'm thinking, yeah, I don't like it, or US dollar Swiss, for example, right? Let's say we get into this trade and this trade does that for 4 days, and then it pushes up to there and gets me into 0.5% profit. I'm banking it because it hasn't moved for 4 days. Yes, I could build a condition for the EA to say if after 4 days positions are in profit by X%, do this. But these conditions I've just explained there are going to be different next week for a different pair. So, you know, there's enough settings in the EA as it is. I could build tons of them into it. But the more complicated it gets, the more difficult it gets to use, the more slower it runs in the strategy tester, etc., etc. So, you know, like I keep saying, you're the trader. You need to do the analysis, and the EA will get you in. So yes, it is automated, but not pure automation. Nothing's ever pure with me. Nothing's ever simple in life, basically, is it? Trading is probably one of the most complex things you're ever going to do. Swiss seems to be powering up a bit. Yeah, just a bit. Well, that's the pound. Let's have a look at the other Swissies. Swiss yen, Aussie Swiss. Yeah, so we've got some strength coming through on the Swiss franc now, which is good. New Zealand dollar Swiss just got the reversal out on M15 and it's following through. US dollar Swiss coming down a little bit. So it looks like we've got some strength in the US dollar as well, actually, because that US dollar Swiss is not coming down as fast as the others. So I would say we've probably, we've got a little bit of US dollar strength showing at the moment, which means the indices should be turning, which they are, which is good. Starting to. So yeah, that's good. Okay, so yeah, I'll leave it there. I'll post in the Telegram group any positions that I take off. I'm not planning on taking any new positions today. I will say if I'm going to, I might take a yen. I might take an Aussie yen or a New Zealand yen if we get a big push, i.e. a load of weakness on the yen today. I might take some shorts on some yen pairs. But other than that, I'm just managing what I've got. I will close out some today. I don't know what. It depends on where the market goes. Hopefully I'll close out some. Otherwise I'm going to go into hideous drawdown for the weekend. But yeah, so just waiting for stuff to move. So I'll let you know what I'm doing with what when I get in to profit taking positions. More than likely going to be on the pound US dollar. Okay, so have a good weekend. I'll be back on Monday at 7:50 at the usual time. If you need anything, come in the Telegram group as usual. I will be in there. But hopefully we'll get some movement. And obviously just bear in mind we've got that news 30 minutes after the New York Open this afternoon, 3 o'clock. So we might get some movement off of the US dollar there if we haven't already had it. So we'll see. All right, guys, have a good one. Hopefully it's a profitable afternoon, and I will see you guys on Monday.